Hello everyone, welcome back to my videos. So today in this video I'll be doing statistical analysis of Bank Nifty. I won't be going into too much detail because this is going to be a short video. However, I will be doing a small statistical analysis of the closing price of Bank Nifty. Bank Nifty, most people in finance, they know what is Bank Nifty. In fact, people in stock market also know what is Bank Nifty. So I'll be doing a statistical analysis of the closing price of Bank Nifty. So let me show you Bank Nifty. Okay, so this is Bank Nifty. So this is Bank Nifty. Now what I'm doing is I am selecting the 30-minute candle window for Bank Nifty, and I'm using TradingView. Okay. Furthermore, I have a paid subscription to TradingView, so therefore I will be using this platform to get my data. Okay. Now what I'm doing is I am exporting the entire chart. I have already done that, by the way, so I don't have to, but I can export the chart data in CSV form, and I can get the CSV, the OHLC and everything, all the data values here. So you can see I have got these many data values. I'll be using the closing price of Bank Nifty for this video. So let me do that. And I have my MATLAB window here. Okay, I have already selected my MATLAB window, and I have already imported some data values, some old data values. I have Bank Nifty. Okay, so I have imported, I think, these many data values. A subset of these data values. This is till 28th of May. Yeah, so I was doing some testing. So this is till 28th May 2021. And this is also 30 minutes window. And I have selected a subset of it. I have selected the starting 1160 rows. It's because it's fast to import in MATLAB. So let me show you the close values. Close values of, let me go to the close column. Let me show it to you. So these are all the closing values of Bank Nifty. 30 minutes. So I have 1160 rows. Now let me do something. Now let me check the distribution of the closing price of Bank Nifty. So to do that, I just type close, histogram of close. Let me pass on the number of pins as 50. So you can see, so this is the distribution. You can clearly see the distribution of Bank Nifty here. So from this figure, I can see that the majority of time Bank Nifty was concentrated in this section, this part, between 2.8 and 3.2. Of course, multiplied by 10 to the power 4. Let's not consider the scale. Let's focus on 2.8 and 3.2. Most after that, Bank Nifty also concentrated between 3.4 and let's say 3.7 something. That means there was a sudden change, or initially Bank Nifty was between 3.4 and 3.7, then it fell down, stayed there, stayed between 2.8 and 3.2 for some time, and then came back up. I mean, there can be a number of reasons, but as far as I know, looking at it, I can say that Bank Nifty was down, and then it started going up, and it's there for some time between a certain zone, 3.4 and 3.7. Looks like it. Okay, Bank Nifty actually went to 3 point something. Let me just check. 3.8. I don't think it went to 3 point something. Yeah, 3.7. Yes, it went to 3.7 in February. Okay, so this is the thing. So it was there in February, then it fell down. Okay, makes sense now. So it was there. This side, this second part of the lump. This shows February, whatever, February-ish time zone, and this means it's the recent one. Okay, so this is the distribution of the closing price. So now let me also show you something using KS density. It gives you a smoother version of the same distribution. If I do that, I get the same figure, two basic lumps, two lumps. Looks like a Gaussian mixture model or something. Okay, so this was about the distribution. Let me go back to my histogram distribution. This is my histogram distribution of the closing price of Bank Nifty. Now let me do something. Let me now compute the percentage change. Let me now compute the percentage change in the closing price for Bank Nifty, which we all can do very easily. Now I have done that. Now let me check the distribution of percentage change. And let's see what happens. Whoa, as soon as I check the distribution of the percentage change, whoa, something happened all of a sudden. This is, by the way, not percentage change. I have not multiplied by 100. So let me multiply it by 100 again. Let me do it again. And we can check the histogram distribution. Whoa. So you can see what happened all of a sudden. All of a sudden, something funny happened. Something interesting happened. The percentage change is kind of following a normal distribution. That's pretty interesting. That is really interesting. All of a sudden, Bank Nifty started following a normal distribution. The original distribution of the closing price is not normal. Please take a look here. It's not normal. However, if I check the distribution of the percentage change, it's coming out to be a normal distribution. That could indicate a few things. Most things in the real world are normal. That's why percentage change is also becoming normal. Well, I don't believe that. Or the models or the way the entire system works is based on this normal distribution. This by system, what do I mean by system? The way traders, they are interacting with the market and the way they are making the change in price, either by buying or by selling, is driven by something that approximates a normal distribution, or something they are highly influenced by the normalish behavior of Bank Nifty. Of course, the percentage change. And this was, by the way, for 30 minutes. So let's do one more thing. Let's do for 1 hour, or let's do it for 15 minutes, because I know most traders, they look at 15 minutes. So let's look at 15 minutes. And let me export this data into my Excel. Just give me a second. Exported. And let me, okay, got it. So let me focus on the closing price. This is closing price. Yes, this is closing price. And let's check if it's the data. The data is recent. Yes, it's recent. So let's check 15 minutes. What happened? So let me import it into my MATLAB. Close is equal to this, the entire column. And let's check the distribution of close first. Let's see what we get. Okay, so this is the distribution of the closing price. Okay, kind of. Okay. So let me also refine it. Let me make it 100, and let's see what happens. Okay, much finer picture. Majority of the time, Bank Nifty was between 3.2 and 3.4. Yeah, we can see 3.2 and 3.4. So let us also do a case density of closing price, and let's see. Yeah, we were right. 3.2 and 3.4. So majority of the time, Bank Nifty was between these two prices. So now also let's check the percentage change. What happens? Let's do percentage change, and let's check the distribution of percentage change. Over 50, 50. Whoa! Once again, we are getting normal distribution. Let me define it a little bit. It's interesting. Wow! Once again, we are getting a behavior that closely approximates normal distribution. I am now kind of convinced that this normal distribution is kind of, all the traders, all the algos, all the algo trading machines or whatever, they are highly influenced by this behavior. Something is going on. Something is going on. Of course, we can exclude all those values which are beyond 1 and which are beyond -1. They're like exceptions. Majority of the time, everything is between -1 and +1. So if, yeah, just got an idea for trading. So if let's say we are looking at 30 minutes window, or let's say we're looking at 15 minutes window, if the price has changed by, let's say, 0.9%, 0.9%, or let's say -0.9%. So what I'll do is I'll buy. Why? Because the probability that Bank Nifty, the change in Bank Nifty within 15 minutes beyond -1 is kind of like an exception. I might fail, it's true, I might fail, but the probability of that happening is very less. So if we are looking at 15 minutes window, and if within 5 minutes, let's say the price has changed by -1, so I'll start buying, because there is a very high probability that the price won't stay at -1%. Again, this is something I just built. Okay, I have not back tested it. I just looking at the graph. I just looked at the graph for the first time, looking at the graph and looking at the probability distributions. I just kind of figured it out on the fly. So you have to test it on your own. Okay, so the idea here is I am telling you from a trader's point of view, I am telling you there might be a very good chance of seeing a wick. Because -1%, let's say -1%, the chances of that happening in a 15-minute window is very less, first of all, because we can see all these bars, these blue bars beyond -1, they are very less. That means majority of the time, the change in Bank Nifty will be greater than -1%. And if you're looking at 15 minutes window, and if within 5 minutes you're witnessing -1 or more than -1, that means, and you're buying, that means you might be right. There's a very high probability that you might be right in buying, or it's your very bad day, or you're very, very unlucky. So we are basically focusing on the wicks, the detail part of the candles. Please backtest it. Please don't apply it in your trading system. This is not a recommendation. Something I figured it out looking at the graph. And I might be wrong. I am most of the time I'm wrong. So you have to test it on your own. So this is how we can use statistical analysis to place our trades, either buy trade or sell trade. You can also see majority of the time the change, the mean value, I can see the mean value here is around 0. That means we don't expect Bank Nifty to change much. I mean, that's funny, right? Either the market is trending or the market is not trending. Even in a trending market like this, this change is saying 0. I mean, that's funny, isn't it? But remember, it's not a daily chart, it's a 15-minute chart. The data was taken from 15-minute chart. So yes, might be false signals. Okay, thank you very much for watching. I'll continue my series on Bank Nifty and Nifty for the next couple of videos. So this is how, by the way, you can do at the very beginning level, you can do some sort of a statistical analysis. Thank you very much for watching. Stay tuned for other videos. Till then, take care. Bye-bye.